Dan, thank you very much for joining us here. I mean, what are the distinctions between the way Bitcoin is being traded, used, thought about, that you think is distinct from what happened 3 years ago?
Well, we have a Bitcoin shortage right now. Every 4 years, the number of Bitcoin's cut in half, and that happened this summer. And we have buyers now, like PayPal, who just themselves are consuming more than 100% of all the Bitcoins that are issued. So when you have big institutional buyers, big investors purchasing more than 100% of the Bitcoins that are issued, is going to cause the price to squeeze up.
When you say a shortage, you mean a shortage of newly created Bitcoin relative to the demand. They're not shrinking the absolute amount, right? So, but I mean, the demand is not some, naturally occurring organic thing. It seems as if there's a lot of trend following going on. It seems as if a lot of people are facilitating the popularity of it. And why does the price action have any connection to something beyond people seem to really like it?
Well, that's really it. Like if 100 million people think it's useful, that's why it has value. And there's different uses. Some people use it to store wealth. Some people in emerging market countries that have banks that might be failing or have other issues with their currency use it to store money. People use it to send money across borders if you're a migrant. So there's lots of different use cases. And 6 years ago, there were only 1 million people on Earth that used it, and it was worth $200 a Bitcoin. And now there's 100 million people that use it, and it's worth $20,000 a Bitcoin.
We did see that little pullback yesterday in the price of Bitcoin, perhaps connected to some of these reports of noise that the Treasury Department might be looking at some restrictions or not. But these things pop up from time to time. Also, a reported hack of one of the bigger wallet providers. We do hear this, and SEC making a move against Ripple, I guess. So a lot of things are undetermined in terms of the regulatory treatment ultimately of this asset class. Is that not a risk?
It is. This is obviously very, very early days for a brand new asset class. And so there's going to be volatility on both sides. But those create the news items that, the migrant using money, using Bitcoin to send money back home to their mom in the Philippines. That doesn't make the news, but that's really what's driving the price.
Well, I mean, but what's the ratio of people who are trading it to using it for something besides, an asset class, a speculative asset class? I mean, $100 bills are used to move money, and Western Union used to move cash all over the world. That stuff doesn't trade at a premium. It doesn't go up 3 times in a year in value.
Sure, but it took Western Union 140 years to get where they're at today. And Bitcoin is only 11 years old, and already 7% of all remittance to Mexico is going over cryptocurrency. So it's progressing at a much faster rate than the legacy system.
And, one of the storylines, as you've mentioned, is bigger institutions are certainly allocating more in this area. They've decided that it's something worth owning, perhaps, instead of something like gold. But are they any more reliable? Are they stronger hands than the individuals that seem to be driving things a few years ago?
I think so. In 2017, there was obviously a media frenzy around it. There were all kinds of newly issued tokens that really didn't have any basis to exist that were coming out. And it really was a speculative frenzy. This is being driven by the most famous global macro investors. This is being driven by public companies like Square and PayPal and MicroStrategy. Big endowments are buying. So, these are the types of people buying for, the 5, 10, 20-year horizon rather than just a quick flip.
Shepard Smith here. Thanks for watching CNBC on YouTube.